for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. In this show, we cover a broad range of topics that cater to CRE newcomers and industry leaders alike. I'm your host, Jessica LaRusso, Regional Director of Sales, and today we are thrilled to sit down with Deborah Smith, co-founder and CEO of the CenterCap Group. Before we dive in, a little bit about our guest. Deborah Smith is co-founder and CEO of the CenterCap Group, LLC, and heads the firm's strategic capital and M&A and execution efforts. Prior to forming the CenterCap Group, LLC, Ms. Smith was co-head of M&A and a senior managing director with CB Richard Ellis Investors, CB Richard Ellis's $40 billion AUM investment management business. He joined CBREI in July 2007 to co-head the build-out of the firm's M&A efforts and led the firm's negotiation and acquisition of a majorly interest in Wood Partners, one of the largest multifamily developers in the United States, in 2008. From 1998 to 2007, Ms. Smith worked on mergers and acquisitions with Lehman Brothers, Wachovia Securities, and Morgan Stanley. Ms. Smith has been involved in more than $100 billion of mergers, acquisitions, and restructuring transactions. Ms. Smith has a bachelor's degree in economic honors and a bachelor's degree in law honors from the University of Sydney. Deborah, welcome to the podcast.
Thanks for having me on, Jessica. It's good to be here.
Yeah, we know we just covered a ton about your background, but I'd love to learn a little bit more about your career path and really some of the lessons you learned along the way. So just to kick us off, can you tell us where you're from and really how you got your first start in finance and then commercial real estate?
Sure. Happy to do that. Although listening to you, it makes me seem very old. when you've done so much stuff, it's a reminder that I'm not as young as I used to be. So sure, I'm Australian. I grew up in Australia on a dairy farm and moved around quite a bit as a kid, and had the fortune to end up at the University of Sydney, where I did a double degree and then started with Morgan Stanley in Australia. I'd always had plans to be a tax lawyer and somehow fell into investment banking. Have never looked back. I'm still doing it 25 years later. I still enjoy it as much as I did when I started in Australia. And it's been a really interesting ride. I came to the US in the late 90s with Morgan Stanley as a power utilities banker. And made a move over to Wachovia, then to Lehman, and then over to CBRE Investors as a focus on real estate along those lines before starting up CCG back in 2009. It's been a great ride. I'm still going.
That's incredible. So let's talk a little bit about the world of investment banking. You know, it's a super highly sought after career path, very competitive. What was it like when you first got involved in it versus what's it like today?
Well, look, back then, 25 years ago, there was no pressure because my parents never went to high school. So there was no pressure that I had to exceed or meet some expectation from a parent or, a teacher or a friend. I took it on as I was lucky to go to college, which was never in the cards either. So, to even get into college was a big deal. And I kind of just figured it out. And then I'd actually put in for all of the tax law firms, the big accounting firms in Australia, because that's where I thought I was going to go. I really enjoyed tax law and the code. I know that sounds weird, but I really did. And I put in for Morgan Stanley just because there was no big ambition to be an investment banker. Sorry for the folks listening. There was no big ambition for that. It was an opportunity that presented. And I was fortunate enough that they hired me, and I didn't have an accounting or a finance background, but I worked hard. I worked really hard. I was prepared to do whatever it takes to be the best. And I had that attitude going in, and I pretty much always have that attitude to pretty much everything. And so the rest, I kind of just figured it out. But I can tell you, when I first started, I thought I was way out of my league. And there were plenty of times I thought, I'm not going to make this. There was too many really, really bright people with finance backgrounds. And I was just, in my mind, a little out of my league. But I've never looked back, and I stuck with it. And here I am.
It's incredible, Deborah. So when you got your start, right, especially you mentioned feeling a little out of your league, maybe a lot of competition. Was there somebody that really helped shape your career path, either early on or really at any stage in your career, like a mentor?
Yeah, and my advice to particularly for people who are looking to get into investment banking, that if you don't make it the first time, don't worry about it. Find your place, and if you want to switch or transition, you'll find a way. But I was very fortunate that I had an amazing teachers in high school who really directed me to college. And then once I got to college, I had a great professor, who said to me when I got into Morgan Stanley, and we talked about, whether it was the right path for me. And I had someone there too, because I didn't know. I just didn't know. And even once I started Morgan Stanley, I had great mentors in Australia. I come to the US again. I got lucky. And so I think, throughout my entire career, I've had people that took an interest in me and took an interest in my career, and gave me really great advice. They really did. And I think it's so much harder to make it without having those kinds of your home team and those relationships that are willing to put themselves out there and help you figure out what you should do and where you should go.
Absolutely. Is there something that you learned kind of on those early days, right? Kind of slugging it out that became crucial to your career, like something that you've taken with you this whole ride?
Yeah, I look back now that I'm older, as opposed to, I guess I'm going to stop saying I'm old. And I look back and I think, I really did work hard, and I was fearless, and I refused to get anything get the better of me. I just assumed I would figure it out, and I always did figure it out. So I guess it's the confidence level there that I was not afraid to take it on, and I didn't think I would ever fail. It was just a question of, this is what needs to be done. So what have I got to do? And I just put one step in front of the other. And look, even going past 3 years in banking, 2 years in banking, it's, I'll figure it out as I go along. And I've just been less longer term focused on where I want to go and more near term focused, and of taking care of what needs to be run right in front of me. And then setting shorter term goals based upon those things. But on your topic of mentorships, I get asked a lot about it. And my advice would be for anybody is that, relationships take two people, right? That you can't have a one-sided relationship. And to keep your eyes open, that if you find people that you have connections with, work on it. It's liking's mutual. There's not too many people that somebody likes that don't like you back. So it's kind of like, if you find a connection with someone, nurture that relationship, put yourself out there and lean on them. And it takes time and it takes work. But I'll tell you, the relationships that I had when I started, I still have. And I actually just had lunch with my associate from Morgan Stanley from the late 90s, last week, that, but it's focusing and maintaining those relationships, and they'll be there for you. It's people assume that people don't want to be bothered and they don't want to, take time out of their busy day when there's nothing in it for them. And you'd be surprised that when you have a relationship and people think you're smart and they think you're good and that you have potential, they will lean into it. You just got to give them a chance.
That's wonderful advice. Could you share, is there anything that you do day to day, like any habits or practices that really have become part of your routine that you could share with our audience?
Yeah, well, I have a very long list of deliverables that never seems to get any shorter ever. Look, I think if you're going to do anything, and is to give it your best effort. I live a life where it doesn't matter what the task is or the job. I don't spend a whole lot of time thinking, this is not a good use of my time. Why am I doing this? I don't want to do it. I don't think like that. I think, well, this is a job, whether it's washing dishes, taking my car to the car wash, or closing $1 billion deal. They're all the same to me. It's like there's a job, and if I'm going to do it, I'm going to nail it, and it's going to be awesome, and I'm going to give it everything I got. And I don't put that whole factor of whether I want to or not. And I think if you take that approach, you'll be much happier.
Mm-hmm.
It's much happier when you stop thinking, why am I doing this? But as a result, it creates a work ethic around and a desire to be successful. And I think that ends up translating into everything. And there's a lot less people that have that drive and a desire to be the best than you think. I think that group of people, and I do a lot of interviewing, I think it's a lot smaller than you think.
That's wonderful advice. Do you feel that work ethic, that drive that you've had and has propelled you through your whole career? Do you feel that that's something innate, or that's something that can be built up or worked on?
That's an excellent question. Look, I grew up with not a lot, and it's really not a lot. And I think when people who come from backgrounds that are harder like that,
Mm-hmm.
it's you have an innate drive to want something more, and you don't always need to know what that more is, but it's you want something more. And so I get up every day, and I think to myself, the harder I work today, the more money I can make, the bigger my business can be, the more profitable we can be, the more deals I can do. And I think it every day. And it's like I can call, more relationships, create more business. And I that's my life. And I wake up every day excited to see what I can get done today. And so I don't know if it can be created or not, but I know that just from where I came from, it's but everybody's different, I suppose, but it's I think there is a drive, at least personality for me, that's there. But I was a big athlete too when I was a kid, and I think my athletic background, you're trained to want to be the best, and you're trained to want to succeed. So perhaps that bled over to the rest of my life.
Oh, absolutely. Kind of one last thing on kind of breaking into the career, right?
Yeah.
Is there any other advice that you would give to your kind of younger, newly moved to a new city in New York City self, or, anybody that is maybe transitioning to a new city or a new role, kind of getting started out? Any other advice you like to share?
Look, it's don't stress the small stuff. I look back for even when I started, and I stressed, there was things that I stressed over I probably didn't need to. I think, and I've gotten better at it over my career, is that people just trust your instincts. Trust your instincts and go. I just actually had this conversation yesterday. It's like trust your instincts and trust your gut that you're going to make the right decision no matter what, and you'll figure it out. And if something goes sideways, there's nothing that's monumentous in your life that largely cannot be fixed. So if you make a wrong choice, you go in a wrong direction, you have a long time to self-correct and get back up. And I really believe successful people will be successful regardless of where they come from, who their parents are, where they went to school, and where they started. But it's on you. And I think that's the lesson I've definitely learned, is that your career is your own. Nobody owes you anything. And if you want something in your life, you go after it and you be unapologetic for it. If that's what you want, you chase it down. You don't take no for an answer, and you go after it. But keep in mind that a shut door, nobody owes you anything. So a shut door is not always a bad thing. It's just a redirect.
That's incredible. So succinct. Thank you for sharing that. So moving on to your work in the broader commercial real estate industry, I'd really love to discuss CenterCap Group in more detail and really what your team is doing in the space today. So can you share a little bit more about the origin story of CenterCap Group? Why create it? Why focus on real estate?
Yeah, and this is not going to surprise you when I give you this answer, just given my comments, is, there was no real big grand plan to start up an investment bank. Otherwise, I have seriously poor judgment, since we're a women-owned firm that started commercial real estate in the GFC. I'm not sure I want to take ownership of that as a deliberate decision. I think it was more a case of, we got a call and it was, hey, I think this company needs your help. Who was an investment manager? Can you help them out? I'm like, okay, sure. It's, I'm an M&A bank. It's kind of what I do. We've taken some time off. And so, my partner and I had been at CV together. And so we're like, okay, well, let's just give this thing a whirl. But the thing is, once you help one client, it's like, well, then I got to get paid and I need a bank account. We need a name. And the next thing you know, we're like, well, maybe we should get some office space. And we were fortunate again. And one of those relationships gave us some space, some shared space. And it was just us. And then there was two of us. And then we're like, well, maybe we need some help. And the next thing you know, we're in a bigger space. And we started our own broker dealer. And the rest is history. And we've grown a lot since then. But everything we've done was we'll figure it out. How hard? This is my standalone. How hard could that be? I mean, seriously, how hard could it be? I could do this. I can figure it out. And that's pretty much directed most of what we do, is how we've built the firm and how we've expanded our services. And we were just fortunate that the calls we've made happen to have been good ones.
That's incredible. All started with that one client. Can you share a little bit about the types
Yeah.
of deals that CenterCap is working on? Who are your clients? What are the types of projects? What are you kind of hearing in the space today?
Yeah, so when we started the firm, our clients were largely investment managers, small mid-tier investment managers, and owner-operators that were looking for capital for one deal at a time. That was kind of the genesis. And we'd come from big bank REIT land, but the public markets were not great, and so we used those skills, and that's how we translated it. Over time, we definitely focus on investment managers. That's still our core M&A business, is buying and selling investment managers. It also does buying and selling owner-operators. It involves buying and selling service companies, anything as long as it's in real estate and there's a corporate tilt to it. But over time, we've built out our capital raising business to focus on top-ups for private placements now, programmatic joint ventures, separate account relationships, which in our world is a much broader and diverse range of investor relationships you need to know beyond who we originally started the firm. So at this point, our Rolodex and our reach is very broad and very deep, and I think is probably broader than what I think other folks have in the space, since it covers not only the fund managers as clients, but it covers pensions, endowments, insurance companies. It's a much broader swath. And then we have our consulting business, which does strategic planning, product development, how to take your business from $5 to $20 billion. It does advisory work on mandates, corporate investing, and assisting limited partners on where they should be deploying corporate capital to. So as a result, and I explain it like that because to answer your question, we touch every facet of real estate. And so our clients can be anybody in real estate, as long as they have size and scale in order to be able to work with us. That's kind of the breadth of the business. And so it ends up being, give me a name. The chances are I can touch them in some shape or form within this industry.
That's incredible. And like you said, you're touching everyone, right? So I'm very curious your thoughts on, what we're seeing a lot in trades and journals today, right? There's a lot of doomsayers that are painting CRE, with very broad strokes. Why is it a mistake to forget how hyper local real estate is from your perspective?
Yeah, Jessica, that was an excellent comment. And you hit it on the head that real estate is very much a local market business. And the non-CRE people have a tendency to paint an entire industry with a brush, or an entire sector with a brush. And so particularly if you look at office, office has been the doomsday and every major newspaper and outlet. But within real estate, office has been in trouble since 2009. This is not new news. However, in some ways, there are definitely markets and pockets in the office sector that are doing great. They've got very high rents. They're fully leased. They're in great markets. They're in high demand. And so it kind of depends, if you're talking about any product, it's like, which product are you talking about exactly? And then within that product, where are you talking? Are you talking 70s product, 80s product, A product, locational product? Is it suburban? Is it, urban? There's it just invites a whole host of questions that I think is very difficult to sum up in a statement. Now, that said, particularly when it comes to the sector like office, because it's tainted with that brush, it is difficult for limited partner capital or pensions, endowments, foundations, even fund managers to put capital into that sector because it's got that taint. And I suspect if you chatted with a lot of them, there would be a sidebar there that says, well, office, if we could invest in it ourselves, maybe we would look at it a little bit differently, but they don't have the mandate. So it really is, and you can go across every product of your 4 food groups, office, retail, multifamily, and industrial. And there you can come up with a similar story. Multifamily has been the darling of the space for as long as I've been in real estate. It's always been a darling. But even now, it's struggling depending on which market, where it's located, and the type of housing that it is. So for us now, when opportunities come in, our first question is, well, okay, what do you mean by that? And what's your story and what's your strategy? Let's get specific.
That makes a lot of sense. Based on your firm's current projects, where would you say maybe asset type, kind of locations, as we just talked about, right? Where is the investment most for, or the appetite rather, for investment today?
Yeah, it's the rise of the niche spaces, actually. It's rise of niche. Industrial has been doing great. But even then in a niche, a lot of folks are chasing IOS, which is industrial outdoor storage. It's a darling right now that folks are chasing down. Last mile logistics, people are chasing that down. Some multi-tenant strategies, depending on where and with who, is interesting. I think retail's is making a comeback. It has struggled for a long time, but we're hearing a lot of interest from folks, investors, with respect to retail. And then multifamily, it's got to have a differentiated strategy. If it's simply a value add apartment play, money's been free for 15 years. And so everybody has a great track record in the housing space. And so it has to have more than a great track record. There's never been a time in my mind where looking at someone's track record in some ways has less value relative to all the other pieces that go into an opportunity. Who the sponsor is, how they run their business, the types of opportunities they're chasing, what their internal infrastructure looks like. All of these things take on increased importance because, so many players have great track records. So the question for us now is, if I take away your track record, what do you got? What's your story? Tell me your story without a track record, and then we'll talk. And so I think that's where it is. I think development is definitely, we've had we all know, it's well known that we have a housing issue in the US, an affordable housing issue. And so if you have a strategy to tackle that, well, what is it? What's the specifics of that strategy? And we're seeing some really good ideas right now, interesting ideas that how they're tackling and approaching the affordable housing problem. So it's an exciting time, I think, at least to be able to flesh some of that stuff out.
Oh, absolutely. What would you say in terms of, can you touch on the overall transaction volume? Are you seeing anyone specifically entering the space or certain players, exiting currently?
Yeah, so we actually just announced probably in February, which was a pretty material transaction. Pretium, which is a $50 billion alts manager, acquired BH, which Matt was a top NMHC manager. They had about 115,000 units. So that was a very material deal for the space. We had done the Carroll transaction last year too, where again, RMR was an alts player, and they acquired acquired Carroll, who had quite a few billion assets under management in the housing space. And then last year, our third housing, we had merged Common into Habit to create the largest co-living player in the world, in my mind. So, there's definitely things and deals getting done, but they are very strategic and they're specific. And so there has to be a rationale. We're finding there's a huge amount of strategic conversations in the market right now. And we tend to be involved in a lot of that dialogue, and we don't always make the front page, and that's usually because we're not the highest bidder. We're representing someone that's taking a slightly more disciplined approach to pricing, but we think the market's very active, and we see that particularly through the consulting business, because it is designed by definition. That company helps companies think about how to grow their business strategically. And that could be a buy, it could be a sell, it could even be organic. But we're in the midst of a lot of those conversations right now. And I would say for us, the last 2 years have been really busy in that division as companies look to figure out what to do next. And because we have the capital raising and we have the M&A piece, it means that we can provide a full suite of services to help them figure out where to go next.
Well, you have such an amazing read, read on the industry's pulse, right? So I'd love to explore. You kind of talked about conversations that are happening for the future. What trends are you most excited about within the future of CRE? What are some of the prop tech advancements you're seeing? What kind of rocks do you see entrepreneurs looking under for untapped opportunities?
Yeah, I like prop tech. I think real estate is a dinosaur as an industry. We're not great at encompassing and embodying brand new ideas that completely rock the supply chain or completely rock the way we do things. But it's starting to chip in. You know, we had done Common last year, and Common was phenomenal in their systems and how they approached the property management space in housing. They were doing some really cool, innovative things that the industry more widely could benefit from. They really were. They came in with a clean piece of paper and a great idea, and they were willing to take some risk and figure out where it went. And what I appreciate about that team, as well as PropTech folks in general, is their willingness to look at a problem a different way. They come at it different. They're not coming at it from a bricks and sticks way. They're coming at it from a consumer products, a B2C, or just in terms of where their mind can take them, of understanding the breadth of technology and what can we solve, what problem can we solve with these tools. And that's not the first instinct for real estate folks is, well, how can we use technology to solve a problem? Right? So that's not what we do. And so as a result, you know, and I see a lot of interesting ideas chip through now. Since those days, we've worked on a couple of different opportunities in order to improve the efficiency of the chain in real estate. But I am, and I've written about it, and I like it a lot, and spend some time on is the 3D printing area. I think is super interesting. And no, it's not a printer you have in your office that you somehow, you know, you create 3D printing out of it. No, these are big machines that it's really additive manufacturing. And in some ways, the concept is not new because if you know anything about log house building, if you know anything about modular housing, it's really the combination of those two things, but pushing it forward with technology, right? So it's about designing and printing houses with machinery and not using people. And that's, if you think about that, that's a huge advance for this industry, particularly when you've got labor challenges right now. It's where the mind goes is I can build that house across the street. I don't need to know what that house is, but I can build it with a machine. And I can frame it and I can do it in less than a day. Right now, there's a lot of things that complications and where the industry needs to move, but the potential is there and the pieces are there. And I think between engineers and tech people and leaning on real estate expertise, if you can bring all those specialties together, I think it has real potential to address the affordable housing issue in the US.
Absolutely. So, how is the investment market in particular thinking about some of these types of advancements, like 3D printing for homes, as an
Yeah. So,
example?
you know, since the GFC, a few trends have emerged, right? You have diversified players and you have specialty players in from an investment management perspective. And then that filters through down to the asset level and who the owner operator is and who the manager is, quite frankly, even at the property management level. But the niche players, they've all straddled off into segments. And so now you could have someone who is a housing specialist, but that could mean BTR, built for rent. It could mean, you know, apartment garden style development. It could mean buying value add properties. And so there's a whole host of split outs even within those specialties. And I think what we're seeing is for investors, that means they're becoming more detailed and looking at the product too, right? And so when you're looking at workforce housing, which is somewhat of a newer creation, it's what we're talking about is looking at the housing space instead of through the lens of just vintage, location, and size. We're also looking at it through the lens of, and even as rent multiplier, we're looking at it through the lens of who's our target tenant, right? How much money do they make? Are we targeting someone who makes 100,000 to 120,000 a year? Is it 50 to 60,000 a year? And that's how we're starting to, how we look at the market now. And so you have obviously higher end apartments. On the bottom end, you have regulated affordable housing. Then there's this whole world in the middle. This whole world where the folks do not qualify for subsidies, but they can't afford, to pay $4,000 a month for an apartment, or even $2,000 for an apartment. So what do you do with those people, right? They need somewhere to live too. And that's really what the housing situation, the crisis, when we refer to housing crisis, that's what it is. It's not regulated and it's not 2,000, but how do we provide an apartment where the rent is $1,200 a month? And so that a developer still makes money, the owner operator still makes money, and that the person can afford to live it. That's the challenge we have in the US right now. And I think there's a lot of investors that understand that and are focused on it, but it's coming up with the solutions.
Absolutely. And we're seeing such a cyclical shift of people entering and exiting commercial real estate, right? We have our individuals retiring. We have young people from diverse backgrounds that are entering the space and getting into these new emerging areas, like you just mentioned. So as a trailblazer in this industry, what are you most excited about in this next wave of CRE and CRE professionals?
I think the industry is it's always going through change. I think the change we're seeing now is the four food groups, which are seasoned, they're efficient. The markets are efficient for those products. We're continuing to see the rise of the niche products and throwouts like, senior housing used to just be senior housing, but now we're talking about active adult living, which is, almost like your millennial housing for older people, right? Or when we're talking about industrial, we're now not talking about just big bay and small bay. We're talking about industrial outdoor storage, which is a new piece. I think it's the whole logistics shift with population shifts that have occurred. And real estate really is, when we say local market, that's because it's driven by local market demographics, right? Who lives there, how much money they make, where do they work, and how do they get there, right? How do they get their food? How do they get deliveries? That's what drives real estate. And because the US has gone through post-COVID a lot of demographic shifts, that creates winners and losers in the real estate business, right? And part of that has led into just a relocation of what are top markets to invest in. But it's also led to, we are underutilized, or we don't have enough resources or enough facilities or properties, particularly on last mile logistics. Because if you think about coming out of COVID, everyone's become so instantaneous, right? People didn't leave their houses, and so we all learned to order online. So now if you can't get something in 24 hours, you're outraged. It's like, why can't I get that in 24 hours? I ordered it yesterday. But think through the logistics that goes into getting you a product in that short time period, or even 2 days. Think through the logistics. Where do you think that thing comes from? It's wild. It's how it gets you there, but that creates all kinds of change in the industry. And that's where, capital and real estate investors are very good at sussing out opportunity. They're very good at it. And so that's just opportunity that they're now looking to exploit. But even like the remote work, dealing with remote workplaces, it's like, well, okay, we've moved somewhat back to that, but we'll probably never go back entirely to being in the office or entirely at home. Think through the logistics of what an office space needs to look like as a result. Do I have to keep a desk for everybody since everyone's coming in at some point in time? Or do I cut down the space and everyone can share a desk? Well, okay, if we're going to share a desk, do I need some kind of system so that they know when someone's sitting at it? I mean, do you need to reserve it? Does that mean I need more conference rooms or more open floor plans? All these things, anytime there's any change, it filters down and impacts down into the real estate. And that's what I think is really interesting, that we're seeing all this movement, all these changes, and continue regeneration of doing things and looking at breaking them down into smaller pieces and coming up with a way to thread the needle on opportunities so that we can create a market for what those things are. And as a result, I think is really interesting.
Oh, absolutely. And things are changing so quickly, right? We're talking only a few years, major shifts in logistics, how quickly we're expecting everything to show up at our doorstep. Would you say now is a good time to enter into commercial real estate or finance?
Yeah, it's for real estate. I think it's always a good time. It's just a question of into what. The caveat is what. So if you want to be in commercial real estate, what is exactly you want to do, right? And so, because in some areas it's very mature, and other areas it's very not mature and it's very emerging. And I think that there's a lot more vehicles that are popping up and raising capital for very niche specific things. And those things are getting a lot of traction. It's not the case where 15 years ago, you've got a multitude of diversified and you just leave it to the manager to figure out where to allocate your capital. Yes, those are still there, but there's all these newer funds and emerging ideas and strategies that you have to have a good story and you have to have product and visibility. But it really does come down to, what is it you're intending to do? Because by the same token, not to be the party pooper on this stuff, but it's many people now have lost all their promoted interest, right? They've lost all their profit. Hundreds of millions of dollars are gone because the real estate markets have repriced down, and that has consequences. And so if you had underwrote it at X, and now it's hard to borrow so that you can still, the X has gone down. And so you need to refinance that property. You're not getting as much capital from the lender. So you have to put more money in or you lose your asset. And so I think that the world of distress is out there. And so that's creating some challenges too. So it's not for the industry is not for the faint of heart.
Oh, absolutely. For someone that's pretty new to the industry, right? You speak a lot about picking your niche or your market, right? Do you have any advice for somebody that's newer, how they can go about refining that or, as they're getting started, picking their lane, so to speak?
Yeah, look, for folks that are looking to get into real estate, it's, I think you're always better served is working with someone first and watch what they do. Watch what they do and process from it. Look around, test waters, figure out what's out there, because it isn't for the faint of heart. It's not. But there's plenty of ways that you can get exposure into this industry. I mean, I'm obviously in finance, and so I get it from our side of the fence as an advisor. But there's plenty of managers out there. They're everywhere. It's a very it's a competitive space, but there's a lot of managers, and I think the industry is willing to back good ideas. They're absolutely willing, and so you can always find ways to raise capital and lean on relationships, but it all comes down to what your idea is and whether it's a good one or not. And if it's not, then you got to find something else.
And would you give similar advice to someone that's, a newcomer in the investment banking space? Someone that's getting started off this next year, as an example?
Yeah. So for colleges, we're out recruiting now, actually. So for our new incoming class, again, I mean, our job, we only work in the real estate space, so we do consider ourselves a specialist. I'm obviously biased. I love this business. I've been doing it for a long time. This is all I know how to do at this point in time. And I do love it. I love the problem solving. We have great clients. Many of our clients we've had for a decade. A lot of our business is through referrals, and we're really close. We own the relationships. We're tactical in tactical advice for them. And we really do align, and we care about their businesses, and we want to recommend the right transaction and not just any, which is a lot harder. But you get to have an important role, and you get to make a difference in a company's life and how they grow their business. And so it's super cool and it's rewarding, but it's not for everybody.
Excellent. Well, given all of your background and expertise, right, in this industry, I'm sure that our listeners would be curious about some of your answers to a few rapid fire questions. Can I throw a few your way?
Sure.
Okay, excellent. So if you were given $50 million today, you had to invest it by tomorrow. What's your go-to asset, location, and a little bit of what?
Oh, I'd love to invest in 3D printing. That was an easy one. I know a lot of the operators that are out there in this space. They're new and they're emerging, and some are better than others. I have a pretty good idea as to what I think makes a company successful in that regard. But your caveat that it's by tomorrow made it a little bit tougher. But in general, I'd love to invest in operators that are in that early to emerging space. I think I have a nose for good ideas and a nose for what I think sticks in the institutional market. And I would be able to deploy that capital pretty quickly on figuring that out.
Excellent. Now, would that be deployed nationally? Is there a specific location? Let's say, as an example, with 3D printing, like where are you seeing?
Yeah, no, we'd want to back the operator. For my expertise, our core expertise at the end of the day is we're really good at underwriting management teams, and companies, and deconstructing them down and making judgment calls on whether they're there, if they're going to make it long term, or whether they have a good idea and whether they can execute. And so that's where I'd like the capital to go, is backing ideas, management teams that have really great ideas, but just don't have the access to the institutional market. They're the kind of companies that I would like to look at.
I love that. How about a favorite tool or software that you use on the job?
Oh my God, Excel. I couldn't live without it.
That's a good one. I mean, I think pretty much everybody uses Excel.
Yeah, I could not live without it. Yeah, I couldn't live without it.
How about the most common misconception about your job or just the industry in general?
That it's I think a lot of people think that this business is hard to get into, and it is, but not for the tenacious. Not for the tenacious, not for the ones that are really willing to stick it out and just refuse to take no for an answer. They will find a way.
Amazing. Well, Deborah, thank you so much for joining us and sharing all of your insights. I know you're super busy. We really appreciate you spending time to sit down and meet with us. Where can people find you online if they want to get in touch?
Sure. They can go to our website. My info is all on there at centercapgroup.com, or they can go to LinkedIn. CenterCap is on LinkedIn. I'm on LinkedIn. You can type in Deborah Smith CenterCap and I should pop right up.
Amazing. Well, thank you again, Deborah, and thank you to everyone who tuned in today. If you enjoyed this episode, do not miss out on the next one. Visit www.crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. And of course, you can also subscribe to the Crexi Podcast on your favorite podcast app and check out our YouTube channel for video recordings of each episode. Take care and be sure to tune in next time.